Hi, I'm Bernard Golden, Cloud Computing Advisory Board Member for Simplilearn. In this video, I'd like to talk about Amazon Web Services Q4 2016 earnings and how they represent a real transformation in the role of IT going forward into the future. Amazon announced its results February 2nd, and you'll notice that they had a really good quarter. Right at the very headline, it says up 22% sales, $43.7 billion. So big numbers. Interestingly, if you look in the next paragraph, where most companies would talk about their earnings, Amazon focuses on its cash flow, and I've circled all of the places it talks about its free cash flow. And that's important because Amazon really tracks that as a way to expand its business. It's really concerned about how much cash does it bring in, how much cash does it spend, and how much can it hold on to, because that's what it used to fuel its growth. So, very good quarter for Amazon overall. But what about AWS? Well, you can see that it had a very good quarter. $3.54 billion in revenue. That's just for AWS. And you can see that it's had a steady march of revenue growth, those are the bars, over the past 2 years. It just started reporting its AWS revenue separately 2 years ago when they became material enough that Amazon basically had to by the rules of accounting. However, the line represents the growth rate. You'll notice that it is declining. It's got a clear linear trend and trending downward. However, AWS still achieved 47% growth rate in the quarter. And most companies in the IT industry would kill for that kind of growth rate. Just by way of comparison, most of the stalwarts that we know of, the IBMs, the Ciscos, the HPs, the Dells, are at flat revenue or even declining revenue in the same quarter. So Amazon is, in comparison, absolutely killing it, even though it's declined over the past few quarters. Let's talk about AWS Q4 highlights. What did it accomplish? What did it show up in Q4? Well, first, as I already mentioned, it has $3.54 billion in revenue. That is a lot of revenue. Interestingly, it also had $926 million of operating income. And again, that goes back to that kind of cash flow that Amazon pays so much attention to. So it's got a 26% margin. Now, in the past, many vendors would say, well, Amazon prices its stuff so low, this AWS stuff, because they don't have to turn a profit. They subsidize it. They're losing money. We have to turn a profit. Well, obviously that's not correct at all. Amazon achieved a $926 million of operating income, a 26% margin. It is a very healthy business for them. Over the course of 2016, Amazon Web Services released 1,000 plus feature improvements. Some of those are new services. Some of those reflect improvements to existing services. And some of them are relatively small improvements where they might tweak the kind of instance size that they offer within an instance family, something like that. So not all of these feature improvements are major, but clearly it had a huge number of improvements. It's constantly improving what they offer. Interestingly, Amazon identified 38 accomplishments or highlights in its earning reports. And of those 38 accomplishments or highlights, AWS accounted for 12 of them. And that shows the importance of AWS within the context of the overall Amazon business. Nearly a third of what it identified as being highlights for the quarter associated with AWS. So clearly this is a very strategic business for Amazon. And not contained in the earnings results, but the reInvent, which is Amazon's yearly conference where they focus on AWS, had 32,000 attendees. It was a giant conference, and that was 56% up on the previous year. So clearly there are many, many, many more people who are interested in learning about AWS, want to go to the source, want to gather real information. And reInvent is very focused on education. It's really not a marketing, not a sales event. It's primarily focused around delivering educational content in many, many sessions. So huge uptake in terms of conference attendance. So what does it all mean? Well, here is a chart that shows the results of a survey that JP Morgan did. They surveyed CIOs across large enterprises. Average spend was $600 million. And that varied across the entire survey sample, anywhere from 20 million all the way up to several billion dollars. But it averaged at 600 million, so very large enterprises. And they asked them, what proportion of your application portfolio is placed into public cloud computing environments today? And this survey is done in 2016. And what percentage will be done in 2020? And what they found was an enormously dramatic change in application deployment plans. In 2016, about 16% of applications were deployed into public cloud environments. But by 2020, it was going to be 41%. That's really getting on toward nearly half of the total application portfolio fleet for large enterprises was going to be placed in public cloud environments. A dramatic change in the way that enterprises manage their application portfolio. Now, JP Morgan didn't ask about what about after 2020. Was it going to stay at 41% or was it going to continue to grow? And my speculation is that it will continue to grow. There's no obvious barriers to additional applications being placed into public cloud environments. Certainly some proportion of the overall application portfolio wouldn't be suitable for public environments, but a larger percentage than 41% I would envision. So we can see that maybe this line will be extended and continue to grow upward past 2020. So that's the context for what enterprises are planning to do. AWS itself is on a $16.5 billion yearly revenue run. That means it's a very large business. I mean, that's obvious, but that means that it's a large business and growing quite rapidly. In fact, it's the fastest growing enterprise technology vendor ever. I've gone back and researched. There's never been any other company, Cisco, Oracle, any of the high flyers that I can find that grew at this scale, at this size of revenues, this fast. Now, AWS does have a declining growth rate, as I mentioned in the previous slide, but 47% is still the envy of the industry. When most participants are flat or down, 47% is unbelievable. So AWS is executing extremely well and being adopted by many, many enterprises. They're placing their applications there. That's how they're achieving that 47% growth. At a 50% growth rate, AWS would be at about $60 billion by 2020. And even if it's at 45%, it would still be about a $45 billion business. That's really getting into the territory that Cisco, HP, IBM, and Dell are all at. So it could potentially be one of the largest players in the industry, depending on how that growth rate holds up. So it's certainly going to be a major player in the industry. And again, going back to that 1,000 plus improvements over the course of the year, AWS has a staggering pace of innovation. It is really quite remarkable. And in fact, I often think, how do they manage to do it? They've got upwards of 10,000 people working at AWS. There's obviously tremendous coordination that has to go on between all of these different services, and yet they still seem to be able to roll out improvements at a pace that really nobody else in the industry does. So it's unclear. It's kind of a mystery in a way, but certainly they continue to have a staggering pace of innovation, and probably they're going to be on the order of 1,500 improvements this year, something like that. Overall, this is unprecedented in the IT industry. I don't think there's really ever been a vendor that is like AWS, and that makes it hard to really understand how dramatic the impact it has on the industry. So, from the perspective of enterprise IT organizations, something like 30 to 70% of staff will be AWS involved. If you accept this sort of 41% deployment, that means that developers, operations people, finance people, whole range. Project managers will be involved with AWS. A very large proportion of the overall employee base of any enterprise organization. And that means AWS skills are going to be critical for your future success. I mean, there's no way to get around it. AWS is going to be a major strategic supplier to every enterprise IT organization, and every enterprise IT organization has to have a plan on how it's going to manage and run all of those applications, how it will build them, how it will architect them, how it will operate them, how it will monitor and manage them. So, critical for the future of enterprise IT. Well, there you have it. AWS's fourth quarter results and their meaning. I hope you've enjoyed this video. If you have, go down, leave a comment. If you haven't liked it, go down and leave a comment. Like to know what you're thinking. And if you have questions that you'd like me to address in a future video, please submit it, and I'll put together another video and put it up, and you'll have a chance to look at it. Thank you so much for watching today, and bye for now.